All right, today is Tuesday, the 24th of January, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. Where do we start? Let's start by this. I love Discord. You know why? Because it gives me a free sentiment indicator, perhaps the best sentiment indicator you can find out there. I'm reading the comments in the last few days, and of course, the market has been rallying impulsively, and the bulls among our community were feeling sky high. The bear market is over, the bull market is here, yada, yada, yada. And then you got the, what I call the pussy bears, and I love them to death, but they need to grow some cojones here, because in this game, you need some. And of course, in the last few days, they've been feeling doubtful about themselves, about their stance, that maybe they're wrong, maybe the bear market is over. And I told you in the weekend video that this is the denial / the bull trap kind of stage. And in the denial stage, the bulls can't deny the fact without having persuasive evidence. And boy, do they have some. From inflation cooling, from the Fed toning it down with the interest rate hikes, from the reverse head and shoulder formations all over the charts, from the China reopening. And therefore, it's not going to be a denial stage without having a persuasive argument. And today, of course, after Microsoft reported earnings, the bulls were feeling euphoric. And the bears, of course, started to capitulate. Matter of fact, I'm reading the conversation and some folks are saying, hey, I'm going to shift. I'm going to buy the market tomorrow. This is going to go higher. The market doesn't care about the facts. The trend is your friend. Yada, yada, yada. Same crap we've been hearing all along. And I'm looking at Microsoft's earnings and they're pretty good on face value. But there is an extremely alarming trend here, which is the margins. The margins are getting crushed big time. And if one of the top performers in the big cap technology cohort, and by the way, I used to own Microsoft all the way till the fourth quarter of 2021. So I'm not biased against the name by any means. But if that top name in the big caps is showing an alarming trend of a slowdown in growth and a slowdown in margins, most importantly, because the revenues are slowing down, their expenses not so much, then boy, we got a big problem here. And these companies will have to lay off even more employees. And guess what happened to the rally in Microsoft stock after hours? Give us a live look at Microsoft stock and let's see and look and ooh. The gains are all gone. What is that going to do to the sentiment in the market right now? Reality will start to sink in. You know what this reminds me of? This whole rally year to date. Remember the scene in The Godfather when Tom in the funeral comes to Michael Corleone and says, you know how they're going to come at you? And he's referring to the trap, of course. There is a traitor inside. They're going to get Michael buttered up and feeling safe, and then they take him behind the woodshed and shoot him twice. And the traitor, of course, was Tessio. In this case, who is the traitor? Who is making everybody feel safe? That this is over, the bear market is over, here comes the new bull market. Who's Tessio here? The answer is chip stocks. Chip stocks led the rally year to date. Chips happen to be cyclicals. And when we see chips bottoming and moving higher, it is a sign of a shift in the economic cycle. And therefore, a lot of folks are being sucked into this, which I view as a trap, because we have a lot of landmines coming, from the Fed to inflation to the recession risk to earnings and many more. The bulls need a miracle to continue to rally. And folks, I don't believe in miracles at all. I believe in reality. Now we're going to talk about the market dynamics and details perhaps in tomorrow's video. I'm going to talk about something else that happened today. But before we do that, thank you to all of the viewers of this channel. Thank you for your support, and I love every single one of you. With that out of the way, let's move on to the main topic of tonight's program, and here it is. In focus tonight, glitch, or was it? To begin with, folks, something suspicious is happening in America these days. We're seeing systems falling apart all of a sudden, and they say, oh, it's a glitch. We see identities being stolen. We talked about the massive hack in T-Mobile, for example. People losing their money. Disruptions happening all over the place. And they keep telling us that all of this is just a glitch. Oh, we had a glitch, software problem. Nothing to see here, nothing suspicious at all. For example, a couple of weeks ago, all flights across the United States of America were grounded. Think about that. Think about what you think about.
Think about what you'd think about.
If you've been a passenger and all of these planes all of a sudden grounded across all of the country, and the FAA came out and said, oh, it's a computer glitch. A computer glitch grounded all airliners in the United States of America. And then a few days ago, the FAA once again grounded all U.S. flights because a contractor mistakenly deleted files. Whoops, what's going on here? And also a few days ago, we had yet another one of those glitches in Bank of America. A lot of folks woke up, their accounts were wiped clean, and some accounts were actually negative, causing a panic. Yet Bank of America says, oh, it was just a glitch. Take a look.
Bank of America and Zelle are now blaming each other for a technical glitch that had customers missing money from their accounts. Bank of America says the issue has been resolved, attributing it to an issue with the Zelle app. But Zelle is blaming the bank, saying there was no issue with its platform. ABC News business reporter Alexis Christoforous is here with more on this. Alexis, what do we know at this point about what and how this happened?
Yeah, they're playing the blame game, and who gets hurt in all this is the customer, right? So a really scary and frustrating day for lots of Bank of America customers. Imagine logging onto your account and seeing that money is missing. In some instances, there were negative balances. So as you can imagine, these people ran to the bank for answers. They didn't get any, so they lit up social media. They said they were calling the bank. No one was answering their calls. Some people stormed the branches. There was one person who tweeted, I almost lost my mind when I saw $2,000 was missing from my account. Not accepting calls because of extenuating circumstances is insane. Call me.
And today, one of these glitches hit the stock market hard in the morning. A chaotic open for some stocks listed in the New York Stock Exchange sent chills across Wall Street, leaving some investors frustrated and others clamoring for an explanation. And unfortunately, we did not get any believable explanation. Now, a lot of rumors around, a lot of tinfoil hat theories, which I love, by the way. Although these days the oligarchs, the media, and their sponsors and the government, they try to discourage these tinfoil hat theories as, oh, what are you, crazy? What are you, a conspiracy theorist, bro? They made it into a dirty word. And the reason is that way they can control the sheep public. Anyhow, one of these tinfoil hat theories today were that, hey, there's a major market player here who dumped a significant amount of stocks in the morning. And this is the real reason behind the glitch, quote unquote, that we got today. Whether that is the case or not, this was not just a simple glitch. Something more sinister happened here. I don't know if somebody dumped. I have no data. I looked at the data all over the place. Did not find any evidence. And on top of that, of course, a lot of stocks in the morning shot up higher by 7, 10, 20%. So if somebody's dumping stocks, were they also buying some? It doesn't make sense to me, but I know something sinister is happening here. And of course, they say the New York Stock Exchange experienced a technical issue at the open Tuesday. Dozens of stocks opened at prices well above or below their prior day closing prices. Most were halted shortly after the open under rules designed to damp down excessive volatility. And most reopened 5 to 10 minutes after the open at prices much closer to yesterday's closing price. So what is the problem here, Maverick? Hold your horses. Stocks affected included big names like Altaria, MasterCard, McDonald's, Uber, Wells Fargo, Verizon, Rio Tinto, Shell, AT&T, Eli Lilly, Mosaic, Wells Fargo, Nike, Nucor, Transocean, Prudential, 3M, Newmat Mining, Southwestern, United Pacific, Sony, United Parcel Service, Altaria, they already said Altaria, but anyways, Valero's Energy, Occidental, Royal Dutch Shell, MetLife, Visa, Walmart, ExxonMobil, you get the message here. Gigantic companies, the biggest companies in the world, and they lost, what, trillions of dollars worth of value in a few minutes right after the open? And this is the official explanation, of course. What happened? Every day, stocks open at the New York Stock Exchange at or near 9:30 a.m. Eastern Time. There is only a single opening price, which is determined by thousands of orders to buy and sell individual stocks. These orders are aggregated into a single book, quote unquote, for each stock that gauges overall supply and demand. A single price is then quoted at the open, and all orders are aggregated into a single opening auction print, quote unquote. For whatever reason, it appears that many orders to buy and sell stocks did not make it into the order book that determines the opening price, and that the opening auction print did not happen in these or those stocks affected. The effect was that many stocks opened on very low volume and due to a supply-demand imbalance opened at prices far away from their closing price Monday. And they say, what will the NYSE do? How about nothing? What will the SEC do? Absolutely nothing. The SEC NYSE is in a coma. Anyhow, the NYSE has already hinted it may bust all the initial trades of companies affected when it said impacted member firms may consider filing for clearly erroneous or Rule 18 claims. This is the most likely path because many investors, listen to this, put in a market order to sell Mosaic at the open. This morning were clearly burned. It opened down 16% and would likely threaten lawsuits if not made whole, since the price drop had nothing to do with the company or external events. In other words, if you had a stop loss order, for example, and your stop loss order got triggered in the morning because a lot of trades got triggered in the morning. Now, you sold your holdings down 16, 17, in certain cases 20%. You lost a lot of money. A lot of people today walked with insane amount of losses, and everybody pretends that this was just normal, just a glitch, nothing to see here. Now, let me show you some charts here just to illustrate for you. This is absolutely insane. Here is McDonald's, a weekly chart, and look at this. You see the last candle, massive candle, the range is all over the place. McDonald's opened down more than 7%, and it bounced exactly from the trend line. Now, was that a coincidence? I don't know. I'm just saying. Here is Mosaic, MOS, a daily chart. It opened down by over 16%. A lot of folks lost a lot of money here by the stop orders alone. And then it bounced higher all the way by 36% or so. What's going on here? AT&T, I had some calls on AT&T and it opened higher by what, 10%, 13%? I thought I got rich. I hit the jackpot. That was again part of the glitch, quote unquote. And then of course the stock went down pretty much where it was yesterday. Another one, Wells Fargo, one of the largest banks in the United States of America. Millions of Americans have accounts at Wells Fargo. They woke up in the morning today with the stock of Wells Fargo down by almost 15%. What happened? A nuclear bomb? Something happened at Wells Fargo? What's going on here? This caused a lot of panic. And of course, those with stop sell orders lost a lot of money today in Wells Fargo. And then of course, when the glitch was over, Wells Fargo went higher from that point on by about 18%. Insane amount of volatility. Another one, WMT Walmart. It opened higher by about 12%. What happened? Did Walmart report earnings or something? Of course not. And then it went down all the way by about 10.5%, pretty much exactly where it closed yesterday. Folks, we're talking about the largest companies in the world. And we see these massive swings and they say, oh, it's just a glitch. Well, even if it is a glitch, doesn't that expose vulnerabilities in what we assume to be a safe stock market? That our investment will be safe when we invest in a company like Walmart, for example, McDonald's, Wells Fargo. Well, forget about Wells Fargo. If you invest in Wells Fargo, maybe you had it coming. But anyways, you invest in these companies, wake up and your stock is down 20% for no reason. What if this was a legitimate attack? Do we have any defense against that? Do we have any insurance for folks who are going to lose a lot of money? You know what this gave me? Gave me flashbacks of the flash crash back in 2010. Some of you might remember this. Take a look.
Procter & Gamble. Procter's trading at 60.
What the heck is going on down here? I don't
Let's take a
know.
look at P&G. All right, this is going to say everything. P&G is now down 25%.
Oh, well, that's true. If that stock is there, you just go and buy it. It can't be there. That is not a real price.
That stock was down 2%.
Well, just go buy Procter.
All right, this is an unprecedented
Just go buy
thing
Procter & Gamble. They reported a decent quarter. Just go buy it.
Right now, we're sitting down 875 points.
We've now broken Dow 10,000.
The Dow Jones Industrial Average dropped more than 900 points.
And of course, when it's all said and done, the S&P 500 lost almost 10% of its value in about a few minutes or so. Unbelievable. I remember exactly where I was when this happened. I was at work and people started talking about, you see what's going on in the stock market? The Dow Jones is down by 7%, 8%. What's going on here? Somebody attacked the stock market. And I log into my account and I'm down big. And back then, of course, the internet was not good. Phones were not good. And I'm trying to find out what's going on here. Am I going to end up losing everything? Maybe I want to buy something in this massive dip that we're seeing. And I couldn't do anything because even the brokers, at least the majority of them, went down that day. And I said, you know what? To hell with it. If I lose everything, I lose everything. I'm not going to be the only one. Everybody in America would have lost their retirement money altogether. And I went back to work. And of course, when the market closed, it's like nothing happened. No explanation at all. Nobody offered anything. Hey, this is what happened, folks. But we know that certain fat cats got in the trade and they bought the dip big time. They bought all of these stocks at prices that nobody else had access to. And they walked away rich. And of course, course, the official story that they gave us is, oh, there's this kid over in Britain, a hacker. He was behind all of this. Oh, really? What we know, folks, these things are not random. A lot of folks walk away really rich after these glitches and phenomenons that happen in the stock market. Of course, in the next few days, they will give us the official story. Hey, there was a software update. It caused a glitch, yada, yada, yada. Or if the public becomes really, really suspicious about this, they'll say, oh, it's the Russians, it's Putin, it's the Chinese. They hacked the stock market. Of course, that will be the last resort explanation for all of this. Interesting times, folks. And the crazy thing is, every time we get these phenomenons, these glitches, the fat finger trades, the market cools down for a little bit, and then we see a major event happening in the stock market, maybe a few days, a few weeks after that. So the question becomes, whatever your theory is behind what happened today in the morning, was it a leading indicator to something that's about to happen? Was there something more sinister behind this? My hunch is yes, but let me know what you think in the comments. And with that, folks, let's move on to the coverage of the stock market and visit the closing of the indices today. And here we go. The Dow Industrial Average up by 104.40 points, or a gain of 0.31%. The Nasdaq down in the red by 30.14 points, or a decline of 0.27%. The S&P 500 also down by 2.86 points, or a decline of 0.07%. When we look at the sectors' performances across the board, it's a weird mix, really. Utilities at number 1, capturing the gold medal. Industrials at number 2 for the silver, and materials at number 3 for the bronze. Meanwhile, the laggards of the day, communication services, the winner in the last few days, healthcare and energy. There is no theme here. The action was all over the place. Now, when we look at the breadth of the market today, NYSE 49% advancing versus 50% declining. The Nasdaq 45% advancing versus 52% declining. Now, the breadth was exaggerated to the upside. We saw days where the NYSE was over 70% advancing. I told you, when we see these exaggerated ratios, we have to come down to the neutral line of 50-50. Now, we're back to 50-50, meaning perhaps today was the recalculation and the market will make its next move starting tomorrow. On to commodities. What's going on here? The action is all over the place, but energy commodities were down big, and they were down across the board. The WTI, Brent, gasoline RBOB, heating oil, natural gas, even natural gas, which is of course manipulated. Every time we get a pop in natural gas, even if it is after fundamental news such as the reopening of Freeport, they hit natural gas right away, as if somebody's manipulating natural gas prices to be down for geopolitical reasons. I think you know where I'm going with this one, but my hunch is also that energy commodities are sensing that the US dollar is about to pop. It doesn't mean a change in trend of the US dollar, but it means that we have a rebound coming. And energy commodities are perhaps sensing that ahead of time. Although metals, they're not sensing it yet. We have gold, silver with modest gains, platinum, palladium also moving higher, copper kind of flattish. And the question becomes, is copper a leading indicator here in terms of sensing what's about to happen in the dollar? If the answer is yes, then who's the fool in the room here? If the dollar is about to pop, commodities will go down. But so will the equities market too. But the equities market is not sensing that yet. And hence the possibility for a rug pull in this rally, quote unquote. On to the big casino, the options market, and what do we see here? The volume is down across the board. And I talked to a lot of my colleagues, and they said they're not trading today. After the glitch in the morning, you gotta take a break. You gotta step back. And therefore, a lot of traders also did the same, so the volume went down. Now, when the volume drops all of a sudden, when it comes to options 101, it means an upcoming change in the primary move that has been going on while the volume was increasing. Now, the volume was increasing as the equities market was moving higher. Now we see the volume dropping all of a sudden. The question becomes, will that be followed by a trend change? Or will we see a lot of folks buying puts instead of calls? Because look at what happened so far. The put-to-call ratio is catering, meaning a lot of folks are chasing the rally by buying calls. A lot of mom and pops are falling into this trap, and they bought a lot of calls. And guess what? When the market maker sees all of these mom and pops buying all of these calls, they say, okay, time to pull the rug, flush them all down. And this is the risk, ladies and gentlemen, of following the herd mentality. You gotta question everything. Always question everything. Anyways, back to the action here. The hottest table in the casino today was Apple, not Tesla. Coming up number 1 with around 740,000 contracts traded today. About 56% of those were calls. And here it is, Tesla number 2, the souffle, with around 700,000 contracts traded today. About 52% of those were calls. Amazon at number 3 with around 600,000 contracts traded today. About 66% of those were calls. On to the unusual activities that took place in the options market today. We start with the ticker GOOGL. Google. We happen to love and adore Google, of course. Anyways, somebody sees the name moving higher. I disagree. I have puts on Google, and they did print today. But somebody sees it going higher for some reason, and they bought the 103 calls for the expiration date, February 17th, with expectations that the name could move down and lose. Excuse me, that's what I'm betting on. What this guy is betting on is that the name could move higher and gain more than 5.5% by then. They paid around $1.75 a piece tenor. This trade, all in all, spending around $3.3 million. And then we have the trade for the ticker AMZN Amazon. My hunch is this is the same trader buying calls on both Google and Amazon because they're picking the same strike price of 103. And in this case, the expiration date, once again, February 17th, with expectations that Amazon could move higher and gain more than 6.5% by then. They paid around $2.60 a piece tenor. This trade, all in all, spending around $4.4 million. And then what about the ticker FL for Florida? Oh, Foot Locker. Here's another bankruptcy optimism for you, and somebody sees it going down from this point on. They bought the 37.5 puts for the expiration date, March 17th, with expectations that the name could move down and lose more than 5.5% of its value by then. They paid around $1.65 a piece tenor. This trade, all in all, spending around $1.7 million. And then what about the trades for the ticker CZR Caesar's Palace? Somebody sees more upside coming for this name, and they're using a call spread strategy. They bought the 45 calls, they sold the 55, all for the expiration date February 3rd, with expectations that Caesars should move higher by more than 5% by the expiration date, but not more than 7%. So it is a tight range here. They paid around 90 cents a piece for the 54 calls, and they received about 70 cents a piece in credit from selling the 55 calls. All in all, the entry cost is reduced to 20 cents a piece, and that brings the total all the way to $200,000. Last but not least, at the bottom of the table, what about ULTA, Ulta Beauty, I should say. One of the best looking charts you can find out there, but somebody's betting against it here that perhaps the name is topping. And they bought the 430 puts for the expiration date, March 17th, with expectations that Ulta Beauty could move down and lose more than 14% of its value by then. They paid around $5 a piece tenor. This trade, all in all, spending around $4 million. Now, what about the heat map? What's going on here? The theme is maybe the risk on is coming to an end because we see software underperforming. We see chips underperforming. We see cyclicals underperforming. Look at Nike, for example. We see biotech underperforming. We see names such as Google underperforming. Which names are catching a bid? The losers year to date. We have names such as real estate names, utilities, the consumer defensive names. They're catching a bid. We also have an overperformance here in industrials, specifically in the defense contractors. Losers year to date, sure. The winners, big time in last year's action. And of course, in this channel, we remain bullish in defense contractors. You don't have to be a genius to figure out why. The money laundering scheme, Ukraine, yada yada. And today, of course, names such as Lockheed and Raytheon reported earnings. And of course, it's not a surprise. They smashed all expectations. And therefore, we saw Lockheed, Raytheon, Northrop, Boeing, GD all moving higher. So will this convince the market that perhaps the rally in chips in software is a fugazi, and maybe they should buy the dip, the opportunity, the actual opportunity in the names that got beaten year to date, such as the defense contractors, such as Big Pharma, such as the consumer staples, the food packaging names. Think about General Mills. Think about names such as Smucker. Think about names such as Conagra, beaten year to date. But these are the kind of names you want to be in when you know for sure that the economy is heading into a recession. And let me tell you right now, the recession is in the bag. Doesn't matter what JP Morgan says. Doesn't matter what Goldman Sachs says. The recession is in the bag. Anyhow, let's talk about some corporate news here, and we start with a company that we love and adore, Google. Anyways, brutal layoffs in the tsunami of layoffs we're seeing in the economy right now. And I told you, we're just getting started here, baby. We will see hundreds of thousands, if not millions, losing their jobs in the months to come. And these layoffs, brutal, no humanity at all. For example, a Google software engineer says it was a slap in the face to find out he was laid off via email after 20 years in the company. 20 years of service. When the company was a baby and they laid off the guy via email? What a bunch of trash motherfuckers. jobs. Here's another one, a Googler who's 8 months pregnant. Her heart sank, she says, when she found out that she lost her job in the mass layoffs in Google. And this is really stunning, and it's a telltale, folks. Some Google workers who've been laid off earned as much as $1 million a year. Now, it's hard to feel bad for folks who've been making $1 million a year, but what does that say about the company? It says this earnings report will be abysmal, a disaster zone for Google, and therefore they have to cut all of these jobs, reduce their expenses ahead of time. So when the disaster gets reported, they say, hey folks, investors, don't panic here. We got it. We're gonna lay off thousands and thousands of employees. Our top guys and gals. We'll get rid of them. It's a sign of desperation, and as a YouTuber, I know the money is down big. I'm telling you right now, ask any of your favorite YouTubers. The money is down big. Advertisers, they're nowhere to be found. They're cutting budgets in a rapid fashion. This is going to be a major problem for Google. And the headline reads, Google must cut thousands more of overpaid quote-unquote workers. Investors demand. This is the beautiful economic system that we call capitalism. And in reality, it's not capitalism. Capitalism died a long time ago. This is gangsterism. This is the rigged Ponzi scheme economy. And the investors, the shareholders, are calling the shots now. They're going to look at the earnings and see that revenues for Google dropping down like a rock. Its expenses are sticking, if not moving higher. The margins of Google will be absolutely abysmal. And the investors are saying to Sundar Pichai, you gotta lay off more and more and more. That is the only way for the stock to move higher. And you have seen all these stocks recently, such as Wayfair, Carvana, the rest of them. These stocks popped significantly higher on the news that these underlying companies are laying off thousands of employees, cutting 6%, 8%, 10% of the workforce. This is what Wall Street wants to see. More and more and more layoff. Fire as many workers as you can. What a beautiful economy that we live in. And when it rains, it pours for Google. The Justice Department today filed an antitrust lawsuit against the company. And I say bravo, for once, the Justice Department did something right. And I say, what about the IMOB Justice Department? What about Apple? The biggest racketeering operation happening in corporate America right now is Apple, the so-called App Store. Of course, the Justice Department, all the judges, the politicians, they're all bought and paid for by Apple. So they have no problem going after Google, but they're not going to go after Apple. That's where their retirement money is. I challenge the Justice Department right now to conduct an investigation and a lawsuit against Apple. They're not going to do it. And if they do it, hats off to the DOJ. When we talk about the tsunami of layoffs, we got more news for you. Spotify cutting 6% of the workforce as the tsunami continues. Now folks, so far the Wall Streeters, the perma-pumpers, the delusional morons, they kept saying, hey, all of these layoffs, they're not a sign that the economy is deteriorating. They're actually a sign that the economy is going to have a soft landing. Wow. Because all of these layoffs are happening in these technology companies, they overspent, they overhired, but we're not seeing layoffs in other sectors of the economy. So this is a tech-specific problem, and you should not concern yourself about it. You should put your blindfold on and continue to buy until you get slaughtered. And today, unfortunately for the morons, the tsunami of layoffs, as we predicted in this channel, is becoming contagious. Today we heard from 3M, an industrial giant, cutting 2,500 jobs, and this is just the beginning. Next thing you know, IBM will do the same, Procter & Gamble will do the same, Bank of America will do the same. And it's going to spread all over corporate America because they want to pump their stocks higher. They're going to lay off thousands, if not millions of Americans. So I say if you think that we're going to have a soft landing and this is the end of the bear market and the beginning of the bull one, buckle up, baby. Buckle up. You haven't seen a damn thing yet. And on top of that, while the economy deteriorates and we see layoffs all over the place, is inflation really coming down? Or is the economy right now in the worst possible economic phenomenon known as stagflation? When the underlying fundamentals of the economy deteriorates while inflation sticks. We've seen it back in the 70s. It's happening now once again. The headline reads, Walmart raises minimum wage as retail labor market remains tight. Well, it's not going to be tight forever, but you're still going to pay more to find these workers. And wage inflation remains intact. Make no mistake, good thing for workers, good thing for Walmart employees who've been underpaid for years, but it's going to push inflation higher. If Jerome Powell thinks that inflation is over and it's time to pause or cut rates, he is in for a massive surprise. In other words, rates, they're going higher. Inflation will stick and it will be so stubborn to break, while the economy, as rates continue to move higher, will get worse and worse and worse. Lastly, in the big pharma names, but specifically the jab names, Pfizer and Moderna, perhaps J&J. Maybe we have some good news for these companies, not good news for us, because the FDA says that the thing jabs will probably get an annual update, but most people will need only one shot, just one shot. And we're not talking about the good shot at the bar. We're talking about the shot that's going to melt your heart, literally. I didn't say it's bad. YouTube algos, robot police. I did not say it's bad. I said it's so good, so beautiful. It's going to melt your heart. Anyways, what about the heat map for the ETFs? Muted across the board. We have some outliers here, such as the pullback in chips. We're seeing chips underperforming today. We're seeing growth and value neck and neck. They're both negative to flattish. So is this the beginning of value catching up to growth? We see the growth rally stalling. I think that's the bet for now. And of course, the notable mention here is when we talk about international markets so far, it has been a massive, enormous rally in Chinese equities. A lot of people are being sucked in here. Robin Brooks says markets are definitely buying into the China is back theme. We're tracking the strongest inflow into China since 2020. That is coming at the expense of the rest of EM, as investors increase their allocations to China and cut their allocations elsewhere. Now, what is the theory behind being bullish China? The reopening, the excess savings, the easing of the monetary policy in China. The assumption is we're going to see what we saw here in the United States in 2020, 2021, when the consumer splurged in the economy and created this massive bubble. This will happen also in China. So the opportunity is in China. I disagree with this assumption. I think the Chinese consumer, from a behavioral perspective, is very different from the American consumer. I think that the Chinese consumer will be in a stagnation mood. They're not going to go out and splurge. There are cultural differences, for example. The consumer got conditioned to live with less during these brutal lockdowns. I don't think they're going to go out there and splurge. So this theory about, oh, you got to go China, all in China, I think a lot of folks are going to get hit really hard when the reality finally sits in. And then let's talk about the EWZ Brazil. It is the outperformer today. And of course, we heard the news that Brazil, Argentina, they're discussing a common currency. That would be a disaster for Brazil, of course. Argentina is a disaster zone right now. It's a radioactive zone from a financial perspective. Inflation is almost at 100% in Argentina. The currency is collapsing. This will be a liability for Brazil. The country of Brazil would be better off creating a common currency with the BRICS members, especially if they add Saudi Arabia. We're talking about South Africa, Russia, China, India. I believe Indonesia is also there. If these countries create a common currency, say goodbye to the petrodollar, the beginning of the end of the United States of America as we know it. Thank you, of course, to the geniuses, your beloved politicians, who have no wisdom at all. But anyhow, let's talk about some charts here before we wrap it up and say goodbye. We start with the SPY, the S&P 500, 30 minutes chart. What do we see here? We talked about the chart stalling for now. To begin with, the chart should pay 398 the respect it deserves. You can't just blast above this number and pretend that this number doesn't matter. Pay 398 the respect it deserves. And yesterday, a lot of folks been asking me, what is the support in the SPY? What is the target for the SPY? And I kept saying 398, 398, 398. And today, the SPY went down to 398 exactly, and it bounced higher from that point on. But it did not make a higher high from yesterday's highs. It remains in negative divergence in the RSI, indicating relative weakness. Now, I have no idea how Microsoft is going to open in the morning tomorrow. Maybe it's going to open positive. And if it does, you're going to fade it right away. That's a trap. But if it does open positive, it could push the SPY higher. Although I doubt it, because the formation right now is also of a bear flag pattern. So the odds say down we go in the SPY, and we're going to lose 398 and maybe go down to 393 and then take it from there. When we look at the daily chart for the continuous contract for the SPY, what do we see here? Yes, the momentum indicators are getting better. The RSI, the MACD, but boy, this resistance level at 4,037 is really, really stiff. The chart got stopped at it today once again. In the psychological behavior of the charts, when we see a stiff resistance point, what does that mean? When the chart gets rejected over and over and over again, it means whatever level it is, in this case 4,037, is saying to the chart, bring a piece of evidence so I can grant you access. For now, you're not good enough. For now, you don't have the evidence in hand to pass above me. Give me something. Give me the CPI down. Give me the Fed. Give me earnings. Give me something, and I'll let you pass. For now, the SPY doesn't have any evidence. The SPY used all of its cards to pass above 3,960. It ran out of cards. It needs a new card to pass above 4,037. Will the industrial giants do the trick alone? You gotta keep in mind, while the defense contractors did good, look at the disaster that took place today in 3M. So I wouldn't bet on that. And if the dollar is about to rebound, energy stocks will not do the trick for the SPY. And if technology is about to go down, they're not going to do the trick for the SPY. And if the dollar goes up again, chips will go down. So which sector of the market will do the trick for the SPY to pass above 4,037? Financials? I don't think so. We'll look at the Q's 30 minutes chart for the Nasdaq. It consolidated today. Boring action, nothing happened. Waiting for what? Waiting for Microsoft. This consolidation is of a bull flag pattern. We know that the chart passed above 280 impulsively. It did not pay the respect that 280 deserves. In other words, 280 acts as a magnet. Hey Qs, if you don't want to revisit me again, get above 290 with the other really stiff resistance level. Get above 290 and then you're out of the woods. But before the chart gets above 290, it needs the piece of evidence to say to 290, please let me in, let me pass, so I can wave goodbye to 280 once and for all. The piece of evidence that the market was waiting for is Microsoft. Well, last time I checked, Microsoft not doing so good. Amazon down 2% after hours. Apple is down. Meta down. So what happens to the piece of evidence? It doesn't exist anymore. So can the Qs pass above 290 without a piece of evidence? The answer is absolutely not. What about the daily chart for the continuous contract for the Nasdaq? The momentum indicators RSI, MACD look good, but at some point they're going to top. Is this the point of the topping? Perhaps. Because before the chart goes all the way to 12,207, which is the next resistance that I have, it has some few soft resistance points. It's having a hard time right now moving above these points. The reason is the volume that pushed the rally so far is not organic volume. The majority of the volume that pushed the Qs, the IWM, the speculative names, the RKKs higher is number 1, algos, number 2, the options market activities, number 3, shorts covering and taking profits, because that's what they do. Last year, the longs took profits and they took losses. Remember when we talked about taxation planning and people taking losses? And this will add pressure on the equities market, so forget about the Santa rally. Well, in the bear market, the shorts who are sitting on an insane amount of profits, they're not going to sell in December. They're going to wait till the new year, then they pull the trigger, book their profits so they can pay taxes next year. And they can finance their taxes for last year by booking profits. And unfortunately, in this dynamic with algos, with the options market activities, with shorts covering, we see a massive bear market rally. And a lot of mom and pops, a lot of retail traders get sucked in. That is the sad tragedy in all of this. The evidence here is the volume remains low. For the Nasdaq to sustain a rally, it needs higher volume. Where is the volume if nobody wants to buy? If the big firms are not buying, at some point, the rally runs out of steam, it runs out of gas, and we see the momentum shifting the other way. IWM 30 minutes chart for the Russell 2000, what's going on here? Remember, before the rally even not started, but maybe ran too hot, the IWM was the outperformer. We said go with the IWM versus the Qs. Now what's going on? The so-called leading indicator, the IWM, has been stalling and underperforming the Dow, the SPY, and the Qs. In other words, is the IWM predicting that the rally is going to run out of steam and move down from this point on? To begin with, the IWM failed to make a higher high, unlike the SPY, unlike the Qs. That is warning signal number 1. It couldn't pass above 188. Warning signal number 2. The RSI is in negative divergence. Warning signal number 3. And the confirmation of all of this, that this pump is over, is when the IWM loses 183 as support once and for all. And perhaps that's going to happen as soon as possible because the Dixie, the dollar index, is finding some footing here. But my hunch is we're going to see these big pops in the dollar coming soon. And Lizanne Saunders from Schwab says that the US dollar's decline from peak has been steep, but not yet close to the prior stress in periods such as 2018, 2011, or 2008. What does that mean? I think that the dollar has yet another rally in the tank here before it goes down once and for all. And this rally will shake all of this recent confidence that we got in the equities market. If that is the case, what happens to gold? Gold will pull back, and the pullback will be dramatic. therefore I continue to say, hey, gold bugs, book some profits. I know what you think. You think, hey, Maverick, you're jealous because you missed the rally. You're absolutely right. I'm not happy that I missed the rally because I did not listen to my own wisdom. I keep saying, hey, folks, gold is the old man in the room. Gold is the best predictor of where the dollar is going to go. But this year, I decided to go against my own wisdom, and I said I'm going to call bullshit in the rally of gold. And guess what? I was wrong. Gold was proven right again. But now, folks, the risk versus reward becomes, if the dollar pops, it's not going to be amicable when we talk about the pullback in gold. It's going to be a flush down. I'm just saying, you do your own, boo. Doesn't matter to me. That's your account, not mine. And if the dollar is going to pop higher, what about oil? What happens to Brent oil? Here's a daily chart. We have a positive trend of higher lows, but it is fighting some hard time here around 90 as resistance. If the dollar comes back, we will see oil moving down. So long as it makes a higher low and bounces higher, it's good to go. But once it breaks that point, it's going to be a problem. And then what about the 10-year yield? What's going on here? I'm still in the camp that we're going to see a pop coming here in the 10-year yield. But today went down, and the reason is we had a massive auction for the 2-year over $40 billion. Of course, the message is we have high demand on bonds, which is, by the way, a recession signal. If you happen to know anything about bonds and the economic cycle. But anyways, that also pushed the TLT higher, as you can see, pushing yields down. But my hunch is we have weakness here in the RSI, the MACD. So the pop that we saw in the TLT today is a fake one. It's going to go down and yields will go higher again, along with the dollar. VIX 4 hours, what do we see here? It is in negative momentum. It lost 20. And folks, at this point, let's be honest. Is the VIX really that important after what we saw today? Massive volatility in the morning. Stocks going down 13, 15, 20%. And the VIX not even moving, actually going down. Do we even need to pay attention to the VIX anymore? Absolutely not. But the technicals say that the VIX will go down perhaps in a retest of the recent lows at around the 18th level. We'll look at Apple, the big kahuna. This is the 30 minutes chart. Yesterday, we talked about an ABC pattern that could take us all the way to 145. And I say 145 because the options market is betting over and over and over again on these 145 calls. But maybe today they gave up. And maybe what we're seeing is a double top in the making. It could go either way. Tomorrow, it's going to be a decisive action for Apple. And as Apple goes, so will the market. Tesla, an hourly chart, what do we see here? It is forming a bull flag pattern. It could rally. We could see short covering ahead of the report coming out on, I believe, tomorrow. We might see some short covering here because the name is down big. But if it happens, if the name goes at 150, 155, the risk becomes once again to the downside. And we talked about Tesla in details in last night's video. Go check it out. Last but not least, what about Bitcoin tulips? What's going on here in the daily chart? We talked about Bitcoin as a leading indicator. The moment Bitcoin goes down, the equities market is going to pull back too. What I see right now, Bitcoin in an attempt over and over and over and over again to crack above 23,189. And it couldn't. So it needs to go down seeking support below. It is also way overbought in the RSI. So the odds say we're going to have a pullback in Bitcoin. Look at the behavior of the chart at the support of 593.34. It retested that level over and over and over and over again, and it found support. Likewise, this time around, we're seeing the opposite. It is attempting over and over and over and over again to crack above the resistance, but it doesn't have the energy, so it has to go down. It has to go down in seek of support. And if Bitcoin goes down, so will the equities market too, especially chips. And of course, it all ties in with the dollar. If the dollar indeed pops higher, as I anticipated, Bitcoin will go down, commodities will go down, equities will go down too. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? How about nothing? I'm serious, nothing. Nothing is coming out tomorrow. But we have a lot in the earnings calendar. We have CSX, Boeing, AT&T, US Bank, ServiceNow, Lam Research, Tesla, here it is, and IBM. Lots of action coming out tomorrow, folks, so buckle up. With that, this is all I got for you for now. Thank you for listening, thank you for watching, and I will talk to you again tomorrow. Take care.
You know how they're gonna come at you?